What's making headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie, Charlie and Ben back with you, unpacking the news of the week and what we've been writing about. And for you, what an absolutely massive week it has been this week. I feel like our poor little fingers have never typed so fast over the last few days. They've been frantically following what the government's been doing and saying and trying to achieve over the last couple of days. Of course, I'm talking about housing tax reforms. Charlie, goodness, what a big week. You've been flashing left, right and centre on The Advisor for these stories as we've been covering all of the changes. Let's go back a few steps though. So obviously we knew all the housing tax reforms were coming after the budget. This is the negative gearing and capital gains tax stuff. They've been waiting for this bill to pass through both houses. It's already had passed through the lower house, and it was going through Senate this week. What a lot going on. Basically, they were like, we want to get this bill passed
as soon as possible. Before the winter recess.
To do that, the thing that raised eyebrows this week was that they agreed to partner with the Greens, basically, and agree to a whole bunch of concessions, which had everybody chatting this week. And I mean,
certainly for our industry.
Where to even begin with this? So basically, if you've been living under a rock, it's basically saying we'll ban SMSF lending for residential property. We'll ban LRBAs, limited recourse borrowing arrangements, for residential property in superannuation funds. So basically, if you're an investor and you want to buy property, a resi property, using your super, you can't take out a loan to do that.
No.
That was an absolute bombshell on this industry this week.
Yeah, it was huge.
That was on Tuesday, I believe.
Tuesday, yeah.
And
when
then
that deal was released.
Since then, so much has been going on. But let's unpack this. Ben, obviously we were chatting about this non-stop in the office as we were writing news, being like, can you believe this is happening? And of course, like, we've all been talking to different players and different people about it. Overriding thoughts?
Yeah, I think the biggest impression has been the speed with which it sort of happened. I think, we found out about it on Tuesday, I believe.
Tuesday, yeah.
And then, everything moved so quickly. We had a lot of reaction from the industry as well, brokers and lenders. And it's going to impact. We talked to the sort of lenders who specialize in these type of loans quite a bit, and brokers who sort of help clients who are using these structures. So it's massive for their businesses.
Absolutely huge. And both on The Advisor and Broker Daily, obviously, have been writing a lot about this. Charlie, you've been covering most of the bill as it's been proceeding through. I mean, we all have really, but I think you've been particularly the one who's been kind of behind the scenes doing all the typing and watching some of the stuff. So this week we had very annoying Senate taking forever. So on Wednesday, I think I had the Senate on, was it Wednesday? Yeah, Wednesday afternoon. I had it open all day because I was hoping it would pass. Nothing happened. Absolutely nothing happened. So
Friday afternoon comes and it's an absolute flurry.
Yes. So, I mean, so Wednesday, we actually had our Broker Innovation Summit for
Thursday afternoon, I should say.
Yeah.
Not Friday, Thursday afternoon.
Broker Innovation Summit was on Wednesday, and that's from my sister title, Broker Daily. And so many brokers at that were picking my brain, being like, what on earth does this mean?
Yeah.
And a lot of them being like, you know what, like about 20 to 30% of my business is resi loans.
I was getting those numbers too.
Yeah, and you talked to a couple of brokers as well. What did they say on The Advisor?
I spoke to a lot of brokers this week. I spoke to brokers on the day that it was announced to get their initial thoughts, and it was just most of them were numb.
Shocked.
And just didn't know what to make of it because it came absolutely out of nowhere. I think for brokers and lenders alike, and you've heard from the self-managed super industry as well, basically stating that we weren't consulted, there was no forewarning. Found out about it on a Tuesday early afternoon, a press release. And as you were saying, I think due to the budget changes, you're seeing a lot of shifts happening to commercial, to SMSF resi, brokers thinking about diversifying. And I spoke to brokers throughout this week who were telling me that 30 to 45% of their pipeline was made up of residential property deals, and now they obviously they had a lot of advice there for borrowers, but stating as well that, quote unquote, it came as a genuine shock. That's from Nick Wilcox, partner and finance broker at Blue Crane Capital, who I spoke to for a kind of lay of the land story I did for specialist brokers who really lean on SMSF resi deals.
And there are brokers that do that, like loads that, specialize in investor credit advice. They specialize in SMSF, which is obviously very highly regulated. So a lot of them being like, this actually, for them, might be 90 to 100% of their business. And they're like, what on earth am I going to do now?
And
like, this fundamentally changes what I'm doing.
He was saying as well that because it's such a complex instrument to set up, there are steps to take out. Some people don't have self-managed super, so they have to commence that. That incurs fees, and you've got to set up a trust. That incurs fees, and you've got to get an accountant and a solicitor. That's he was basically saying that borrowers he had that were well into pursuing an LRBA would nowhere meet that 45-day window that the government has announced, being Royal Assent, after Royal Assent, so 45-day transition period.
I think that's to get everything sorted.
But he's basically that's not enough time. For a lot of my clients, and they've dropped. His estimate is between some clients have spent up to $50,000 to $100,000.
Yeah, and
to pursue this.
This is exactly it. Like on our sister titles who write about property are like, or the buyers agents are like, what? Like, because they similarly are like, well, we've got people who've been approved, and now we have to find the property and secure it, but like, we're gonna have to find this so quickly. So they're now like having to drop absolutely everything and find millions probably of properties. Not millions, it'll be a lot though, of properties to try and get this all done. But well, let's take a step back. So why do this in the first place? Because the argument from the Greens
and the government came out defending itself as well, mind you.
Yeah, the government kind of said what the Greens said. But what the Greens have said is basically they believe that you shouldn't be able to have what they think is like a loophole by being able to purchase a property, by being able to purchase a property in a superannuation fund, a resi property in a superannuation fund, because they're like, well, if you sell it, then you're benefiting from a cheaper capital gains tax, but also they're like, that wasn't what it was intended for. A lot of some of the issues around SMSF lending recently has been, are people using it as a workaround because servicing is pretty tight, so maybe they're trying to buy property in a super to have in their portfolio because they can't actually service. I don't necessarily understand that argument.
Seems so complicated.
Yeah, and I'm a bit like, I don't think that necessarily is happening, but so many people do use their super to buy. And actually, when they were talking about this, I went and pulled the latest ATO SMSF stats. Yeah. Because I was like, what size is this? Anthony Albanese, when he was talking about it, was saying it's only 1% of new lending is purchased using your SMSF or a resi property. Yeah. And I was like, so it's a teeny tiny little part of the market anyway. Yeah. So it seems like a weird thing to agree to ban. But also, like, weirdly, what I was looking at is, normal people are doing it. It's not like sophisticated investors, which the Greens would have you believe. They're kind of saying wealthy investors are doing all of this stuff and they're purchasing properties and they're really, like, circumnavigating the rules and they're benefiting. Most people who have a superannuation fund and less than $150,000, according to the ATO. Yep. A small proportion, it's around, I think, 6% of all assets owned by superannuation funds is residential property. Yep. Some of that is in Australia, some of that is abroad. But most of it is in Australia. And it's not like masses. It was something, I think, off the top of my head, you know what? I should probably pull this up.
Well, I've got some stats too.
Oh, go on.
Yeah. I pulled some ATO stats as well, just because I was hearing so frequently from brokers that the majority of my new clients, and also existing, but definitely new, are younger. They're not sophisticated investors. They're actually mum and dad investors. And, some of them are on one income families as well. And so as of March 2026, those aged 35 to 44 made up 38.9% of new SMSF members, the largest single cohort, and 68% of new members are under 50. And this is according to ATO data. Yeah. And the most common income range for new members is between $100,000 and $150,000 a year.
Yeah.
Is this just new
That's what I
or
was talking about,
existing
yeah.
members?
That's new.
No.
But
Still a
that's
significant proportion,
reaffirming
yeah.
what the brokers that I interviewed this week are telling me, which is the majority of their new client base.
Not purchasing 15 properties.
No,
Yeah.
certainly not. And the Greens are billing this as a sophisticated, as a vehicle for sophisticated investors to buy up properties and buy out first home buyers. But when you actually pull the lid, it just happens to be 1%. But in that 1%, you've got a broad array of people in there.
Yeah.
You've got people that are predominantly kind of low to middle income earners who are pursuing this kind of style of lending. So a lot of those justifications by the Greens and also the government are a little bit thin in my kind of view.
I guess, that's a question because we sort of really think of it within our industry quite a lot. But the question is, will it move the dial as much as the Greens
Yeah,
would hope,
I just,
I guess?
I honestly don't understand it. I'm like, why? I feel like just making people really, really, really mad and like really having a massive impact. Because of course it's not just mum and dad borrowers now who might find it harder to purchase a residential property. Well, actually won't be able to borrow to purchase a residential property in their super. So you're actually kind of making it only available to people who can just purchase it with cash from their super.
Yeah.
But I think the other thing is like kind of being like, well, think about all the other people who are impacted. So lenders who specialise in SMSF. On Wednesday, I was talking about being at the Broker Innovation Summit. We had some of our lender partners exhibiting, and they were literally putting post-it notes and tape over the SMSF sign on their boards because they were like, we're not sure what we're doing yet. We might not be able to do this. So they were kind of covering it up, kind of tongue-in-cheek. Some of them were just like writing over it being like commercial only, so kind of updating all of their
And obviously it still applies to commercial, it should be said.
It still applies to commercial, yeah. So there is much more to unpack. We'll get into it just after this break. So it was announced on Tuesday. Wednesday, we had like a lot of the initial reaction. We were talking to brokers, we were talking to lenders. I talked to a whole bunch of non-bank lenders who partner with us for our sister title broker daily as well, being like, what are you doing? And all of them were like, we're going to encourage brokers to move extremely quickly if they have these deals in pipeline because obviously we want to make sure everything gets sorted. But they're also like, what a time to diversify, which is what you were talking about there, Charlie, because commercial property is not covered in this ban, so you could still use that. But then the other people impacted, buyers agents, as I mentioned before, our sister titles on property, been talking about this. And then developers is one that our director, Phil Tarrant, was talking about with me earlier today, actually, because he was like, well, do they realise that so many people who purchase off the plan, are buying through their trust, and that will impact developers, property developers, because they might not be able to achieve a pre-sale requirement to get a loan themselves. So that will have an impact on new supply.
Oh, yeah.
Plus, people are purchasing in a super using an LRBA to build property. Like, what does that mean? It's a whole big mess.
Yeah, 100%. And you're also hearing from the government in its rationale in tandem with the Greens for announcing this was calling on calling on previous kind of inquiries and recommendations that had been made in those inquiries about flagging risks and it being a risky segment that needs to be regulated. Combining the broker and lender feedback that we've received, it's the exact opposite. Brokers telling me that, we well and truly believe in our view that commercial is a lot more riskier.
Yeah, because the values go up and down much more dramatically.
And we heard officially from 8 non-bank lenders who released a joint statement on Thursday morning.
Yes, after I'd done the rounds calling everybody. And then they decided to band together. I was like, excuse me.
I think you put the thought in their heads. I think it should be said out loud that you gave them that brainwave of an idea. That these chief executives of these 8 lenders, including Mario Rahayam from Pepper Money, stating that this policy change is basically reviving very outdated recommendations, because that inquiry was in 2014.
Yeah.
And then later one in 2019, 2020. We're in 2026 now. It's been
12 years.
6 years. He's basically saying this is before tighter and a tidal wave of superannuation and prudential regulations came in, and the sector's since evolved, come a long way.
Yeah.
And his quote is, this system has evolved, the guardrails are stronger, the rationale for a blanket ban does not stack up. This change does not target residential property speculation and will not move the dial on housing affordability. What stuck out to me was this responds, quote, to yesterday's market, not today's.
Yeah.
So he thinks that the government is pulling out some mothballed inquiry to give it greater
gravitas.
Give it, yeah, exactly.
Yeah.
We're in actuality, lenders and brokers are saying the exact opposite. And when we look at the gearing rate, like it's a gearing rate of 39%, and that's a lot below like typical loan to value ratios in mainstream housing finance even. Like,
And I think, so I was looking at the figures, I found them, the ones that I was talking about earlier from the ATO, and this is, you kind of referenced some of them as well, Charlie said the March 2026 data, it's the most recent data we have from the ATO and SMSF.
yeah.
So a total of $62 billion dollars worth of residential real property was held by SMSFs in March 2026.
Okay.
That's around 6% of total assets allocated.
Yep.
And these were supported by $29.4 billion in borrowings.
Yeah.
So not a teeny tiny amount.
Yeah. It's
I mean, of
nothing.
course, billion sounds like a lot, but like it's in the grand scheme of things. If you think about how much property, trillions of dollars worth of property,
Yeah.
12.7 I think it is now,
Yeah.
is in Australia.
Yeah.
62.7 billion is residential real property held in SMSFs.
Yeah.
Tiny amount.
0.5% of new flows each year.
Yeah, so these, depending on what you're talking about there, because these figures change. So yes, it depends on who you're talking to and what point of time data they're looking at.
True. And it should be said that the lenders didn't actually specify when those kind of backed assets, LRBA backed assets, and the debt and the gearing rate and the new flows, they didn't put a date on that, as you did.
Yeah.
Those are March 26
They're
figures.
like kind of average.
Yeah, it's,
but I think this, this was the big shock announced on Tuesday. On Wednesday, we had everyone's reaction being like, what on earth are they trying to achieve here? All about our comment section just popped off.
My phone was going nuts.
We had reads through the roof. Actually, interestingly, AI Overview picked up your story, Charlie, on the SMSF announcement. So we got loads of reads from AI. Thank you very much. And then I think since then, obviously, we've been talking to everyone about what they think. So we've had a bit more time to digest, and the associations came out and we're like, we don't agree with this. We heard from lenders being like, this is, problematic. And of course, for so many non-banks, they've been really leaning hard into SMSF already because it's been so popular. We've been increasingly seeing people using their superannuation fund to buy property and, have that sort of building their superannuation fund value. So yes, lots of people talking about it. And we kind of thought, all right, well, we'll see. And then on Wednesday, as I said, I was watching in Senate, expecting some drama. Nothing happened. They didn't really get to it. Then on Thursday, things happened very, very, very quickly.
It all went off, eh?
It was basically they were talking about it. They'd gone through loads of amendments. So people obviously having to put in the LRBA ban amendment. There were also questions about this widow tax that the media have been calling it, which is basically saying if you've been negatively gearing your property and then your spouse dies and you co-own the property, you can no longer negatively gear. So it basically is a penalty. You're being penalised twice. You've lost your spouse, poor thing, and now also you can't negatively gear your property. To benefit from the old tax.
But the government confirmed on Thursday, Katie Gallagher confirmed on Thursday that they would close that up.
Yes.
At the later second tranche.
Yes.
When that's introduced.
Because this is again
the
the really annoying thing about this bill that's being passed to try and get these reforms through is that they're kind of going, we're doing it. We're not going to tell you any of the detail till later.
Yeah.
And David Pocock was very frustrated in the Senate because he'd written his own amendment and tabled it. And Katie Gallagher was like, well, look, sorry, we're not going to pass this, but our amendment will say the exact same thing as yours.
Yeah.
And it's like, well, why didn't you not just pass mine right now? And it kind of, you don't have to put it in the second tranche.
Yeah.
And there's going to be a lot in that second tranche too. All of the unintended kind of clauses that have opened up, the media have reported on.
All of the
industry
CGT stuff for
groups.
business that we've been talking about, that's coming in the second tranche.
That carve out for startups will be in it.
Yeah.
But we got some clarity at least on SMEs and the kind of annual threshold being
Going
increased
up 10 million,
from 2 to 10. So that's good at least.
Yeah, and I guess that's been one of the big points of contention throughout this whole process, just the limited amount of consultation time to sort of go through the finer points.
With
and I think,
anybody, with the businesses, with SMSF providers, with mum and dad investors. It feels like at this point they're just like making things up and hoping things work.
But I guess to play devil's advocate on the other side of things, maybe the government thought this is our one chance to do something like this, and if this stretches out over an extended period of time, it's just not going to happen.
The way they see it as well, and you've seen a gazillion analysis and opinion pieces about it as well, but they want a monster majority in the House, and they've got supply in the Senate with this bill with the Greens. So, to be honest, I don't think they're too phased about it. There's 2 years until an election, and the way I see it, well, it's 1% of the housing finance market. We don't believe it's going to be as consequential as you guys are saying. But accountants, conveyancers, buyers agents, brokers, you've got a lot of professionals caught up in this change as well. And it's financial innovation, and it's super, which is always controversial as well. Any kind of, since I've been reporting, superannuation changes are the most controversial because they're retirement savings. And if you happen to put your savings in a self-managed super and take, the risk over your investments, that's why people are kind of speaking up about it, because they're kind of saying, well, it's my retirement savings. I can choose to do with it as I wish. If I want to go and get out a residential property loan through my self-managed super, why shouldn't I? I've worked for that money and it's gone into my self-managed super, and I'm creating wealth through my investments. So who are you to tell me what I should and shouldn't be doing? And a lot of the brokers said that as well. You've got this big divide between old concessions and no concessions.
Yeah, and I think this is it, is that it's kind of, I mean, we know we've had to do something about affordability. The problem, I think everyone is really sort of scratching their heads about is being like, well, none of this is about supply. Can we just bring on some more supply? Like maybe do something like the New South Wales government did, which is, really accelerate modular housing. Do something like that, or do something on prefab and maybe make more lenders be able to offer prefab loans. Like we have had a little bit of chat around modular housing in the budget, but not masses.
No.
They also talked about construction a lot in the budget as well, but like I think a lot of it was around tax reform, and this is what a lot of people are saying, is you're actually creating this kind of really almost exacerbating the has and has nots. The whole budget was about the inequity of intergenerational wealth, and saying, some of the older people have probably a bit more benefit because they're benefiting from, these tax lucrative, in some cases, like tax concessions.
Yep.
So they're saying we're closing this all up.
Yep.
And now people are like, what? My whole dream was to get to be that person, and now you're taking that possibility away from me. I can't actually possibly grow my wealth like I wanted to.
Yeah. But then advocates will just say that, well, you need to bite the bullet at some stage and do it. There needs to be the old system and then the new system.
Yes, and I totally understand. House price growth in Australia has been bonkers.
Through
We've heard repeatedly this week from Senator Katie Gallagher, I think, and Clara O'Neill, both talking about this.
Definitely
and I think they're
Clara
both
O'Neill.
referencing, talking about the 50% increase since COVID in house prices, which is obviously
massive.
I mean, they kind of do say in Australia that property prices double every 10 years.
Yeah.
And it's been 6 years since COVID. So you kind of be like, well, 50%, if that is the thing, is kind of right.
We're almost
because
there.
we're halfway there.
Yeah.
So you expect it in another 4 years that it would have doubled. That, in theory, is what house prices have kind of done in Australia. That's what people expect. But they're saying that's not sustainable because obviously incomes don't catch up, and it's moving quicker and quicker that it's getting to that doubling. So, saying, well, actually, we might end up the decade 12% higher.
Yeah.
112% higher.
Yeah.
So I think like the whole argument around looking at changing some of the taxation around housing for property investment particularly is, fraught.
Contentious, of course.
Yes.
Yeah,
and drama.
especially when people are hinging their decisions on it. And like as we've said in previous podcasts, these aren't inconsequential decisions. They're big decisions.
That's why Prime Minister and the Treasurer are making them.
Exactly, but what I mean investing in a property too.
Oh, I see. Yeah.
So you've got in some cases life savings and whatnot going into these deals, and there's that when I was speaking to brokers, that concept of the growing wealth divide is becoming larger and larger and larger and larger. But then at the same time, what did people expect, that there would be a 50% discount on capital gains for the rest of
I think they did expect that.
of time?
Yeah.
I think just because it's become such an untouchable theme of no one has the guts, or I don't know, depends on who you ask, stupidity or courage. It depends on who you ask to touch something as massive as this, and the government's done it, and they're not apologising about it.
But I think, like, at the end of the day, should they? And I think this is the question, because if, let's say, we look back in 5 years' time and house prices have come down and affordability is better and housing supply has increased, which, believe that when I see it. But let's say they've done what they want to do and made housing more affordable, then that's a good thing. At the end of the day.
Yeah,
that's a good thing.
Yeah.
But for our industry that we're reporting on, not a good thing.
No.
Because obviously so much of what brokers have been doing have been helping people do this and write these loans, and now they're having to frantically change or try and push these loans through super quickly. So kind of dropping whatever they were doing to get stuff through immediately. And so it just creates so much stress, unnecessary stress.
Yeah, and borrowing through an SMSF is like the perfect example of why, like, you'd never try and figure that out by yourself.
No, please don't do that on your own. Talk to a financial planner and a broker.
Absolutely, and especially now.
Yeah.
If you're in flight, certainly talk to
So,
a
yes, this
broker.
week I have never watched as much Senate in my life.
No.
I've watched a lot of House Reps before, but Senate, not really one that I'm paying that much close attention to. But the debates have been going on for ages. And annoyingly, actually, as well, just learning a bit more about the sort of legislative process, being like, can you not just do this with a timetable, please? And like, let us know when this is happening rather than bouncing around from topic to topic.
Senators physically standing up and moving to vote.
People just walking out and then being like, no, come back, you need to vote on that thing, don't just delay this any longer. So that was pretty annoying, actually. And the one thing I did learn is that David Pocock likes a very tight suit. Yes, that is something that I have watched with interest. The tightening of his suits.
That's his MO a bit.
So that was Wednesday, Thursday, pretty much nearly all of our stories. We actually ended up creating a sort of centralized resource of our housing tax reform coverage, not just here on The Advisor, but across Momentum Media, Property and Accounting Titles, because we've been writing about it so much and all the journalists have been talking about it in the office at the sort of news floor. We were like, it'd be actually helpful to be able to just track this in almost like a live blog. I mean, not quite a live blog because it's only 3 of us, but looking at sort of what have we been writing about. Here's everything we've been writing about this, so you can keep tracking along as it comes, because obviously you're having to go through the website otherwise. And we were getting people kind of, I think, being like, where is this information that you talked about? We're like, we've moved on since then.
Yeah, it's old news,
We've written 5 other stories about it since then.
Yes.
So kind of just tracking where we were and how quickly. I think, we started off with like 1 a day, and now I think we're like 4 or 5 a day new updates. So
sure.
Do check out the housing tax reform story. It's living on the homepage at the moment. If you're interested in seeing how it's been evolving, and we'll keep updating that until it passes, which, by this point, the time this podcast comes out, it probably would have passed.
Oh, yeah, for sure. It's passed the Senate now, and Labor has a supermajority in the House. It'll pass the House. It'll become law. But worth reading those articles, because there are different timeframes for each element of the change. The SMSF change is going to come in soonest. Well, that'll be the
first thing.
Apart from the income tax changes and the instant asset write-off, which were obviously
bills.
less controversial components of the budget. The SMSF resi borrowing ban will come in way before the negative gearing and capital gains tax
which are from
changes.
1st July 27.
The SMSF ban will come in 45 days from royal assent. But it also should be said that existing arrangements will be grandfathered.
Yeah.
So it's perspective.
Yes, which is why, again, people are annoyed.
Exactly.
Because it's like, why couldn't you give me the same opportunity?
Yeah.
But I think this is, as I said, like, for a lot of brokers, a real frustration because, as you say, it's been a lot of work they've had to do, but also so many of them being like, I'm going to have to seriously rethink what I do for a living, because if you've been specializing in this and doing 80, 90, 100% of your business just on SMSF lending,
Yep.
you're cutting out a huge chunk if you're not letting people borrow to buy a resi property.
Yeah.
Obviously, you can still use all your cash if you've just got loads of money in your super
Yeah, I was saying
to buy
there was
resi property.
a joke in the office. Well, you could always just
Buy it. Come on.
punt it all into Sanders sack. That's always an option. I think the real estate journos were getting a bit facetious there, but I don't blame them.
Yeah, I think talk to a financial planner. But I think generally that was obviously the big thing we've been talking about has been the housing tax reform bills and the SMSF amendments, all the amendments coming through, the widow tax stuff, looking at what brokers think, what lenders think, what associations think, what people in the property industry think. We've been chatting to everybody. So that has been a lot. I feel like now...
I think it should be said as well, just briefly, but the brokers that I spoke to, they weren't black and white either. They kind of acknowledged that, well, look, there are underlying problems here, and that you've got these so-called spruikers on social media who are kind of touting SMSF as an easy path to wealth creation. So they did agree that there needed to be tighter regulation. They were on the side of let's make this as safe and secure as possible, but the blanket ban is just seems quite extreme. So you've got brokers out there with very nuanced opinions as well. So that's all obviously in our stories.
Well, SMSF and housing tax, if you haven't read all of the coverage, you can find it on theadvisor.com.au, of course. As I said, there's this kind of wrap-up of all the housing tax stories we've been writing about, and with all the links to all the different articles, or you can obviously read each one individually if you want the full lowdown. But really interesting to see, really interesting a time for everybody in this industry, I think, to be chatting about. And lots of people having to, like, kind of, pull the pin on things. Like, there were some things that were going to be announced that people are like, we're not ready to announce that yet because we've got to come back to the drawing board. A lot of the lenders obviously were, doing lots of promotions for SMSF resi stuff, and now, like, we can't do that anymore, or can we do that still? So huge amount of focus on here, but there are other things happening in the world of broking and lending.
Can you believe it?
Can you believe it? And we'll get into it just after this break. The other thing that kind of got, I think, lost in the headlines this week, not like we wrote about it, but not many other people did, which was this new car lending report from ASIC. So the financial services regulator had been reviewing car loans, basically. We knew they said it was going to be one of their enforcement priorities, and they had been talking to 8 different lenders about what they've been doing with car lending because they were worried about poor consumer outcomes, basically. And so they did a review of these 8 lenders that specialize in car finance, and they were looking at loans that had been entered into between March 2023 and March 2025. And they were like, what do they look like? What kind of traits and characteristics these loans have, and what, if any, consumer harm was being done? Turns out quite a bit.
Quite a bit, yep.
The main issues, I think, when I was reading this report were on things like the fees being charged.
Yeah.
So saying, well, there was a couple of examples they pulled out where they were like, the establishment fees and costs were like up to $9,000 on one of the loans, which is a lot.
Yeah, I think that was for a loan for a
$49,000 loan. It was $9,000 in a variety of fees, including a lender fee, establishment charge, and then a separate distributor charge. But like as you were saying, like there was a massive discrepancy on fee charges and sizes compared to the actual loan size.
Yeah, exactly, as a proportion.
There were loans that were far smaller in value with far more fees than there were a higher loan with far less fees. It was
crazy. The other thing they found was the discrepancy, obviously, because car loans are, in a lot of the time, subject to a little bit of a flexi interest rate. The interest rates kind of range from like around an average of around 11 to around 22. So quite a big difference again. That also depends on obviously the type of car they're financing. So if it's new or if it's secondhand, the borrower again, if it's risk-based pricing. So lots of different things that would be feeding into that. But for our industry, the thing that's really interesting is saying we think you need to be looking closer at who you're working with and how you're the oversight you have of
Yeah.
your third-party introducers.
Yeah, that's one of the things the Commissioner, Alan Kirkland, sort of said in the release that, there should be more, lenders should be looking at the experience of borrowers, but he particularly mentioned those that are sold by third parties, so that includes dealers and brokers.
I think, to be fair,
Brokers
and
were brought up
again, he
specifically.
does talk about brokers here. I think that's car finances.
Mostly dealers, yeah.
I think so too.
I mean, obviously we're biased, but
Yeah.
I think that's mostly car dealers,
Yeah.
based on I think what we've seen in previous ASIC enforcement action they've taken. It's been concerns about what the car dealers have been doing.
Yeah. Yeah, for sure. I think they were just referring to all intermediaries, and brokers were included in that.
Yes.
You know?
So saying we want you to have better oversight and governance of what distributors are doing and making sure they're actually, making good use of the target market determinations.
Yep.
Target market determinations, the TMDs. So kind of saying, if there are TMDs, are these third-party distributors using them and applying them correctly? The other thing I thought was pretty interesting in the car loan report, lifting the bonnet. I think that was what it was called. I thought that was quite cute.
I brought that up with Ben. I
Quite
was
cute.
wondering how many times that passed internal checks.
I'm pretty sure we've called our car finance features lifting the bonnet before, lifting the bonnet on car finance.
Yes.
I think it was definitely I've definitely written one before called that actually. But yes, and I think the other thing that we were looking at was some of the what happens to hardship requests, and they were saying, there are some cases that borrowers had asked for hardship assistance, they were given it, and then the lender had called in debt collectors, and they were like, "No, you've given us hardship assistance.
Yeah.
Why are you calling in debt
This
collectors
is your
now?"
hardship assistance.
Yes, you are now really, really in some hardship.
Yeah.
So they were saying there were too many instances where people were, asking for help and they were still being pursued, or they were being charged for interest for loans that had actually been paid off, being charged penalties for loans that weren't in arrears. So just generally a bit of tidying up needed in car financing. Charlie, anything else about that report that caught your eye?
Well, the hardship thing stood out to me glaringly because, how is it that, so a sample size of 250 loans, of that, 90% still owed more than half of their total loan amount, and in some cases more than they'd originally borrowed, and yet they were calling them debt collectors when they were on hardship arrangements, and it should have been explicit that look, these pool of borrowers are going to be more at risk than others. Let's go a bit easier on them and take our kind of legislative regulated.
And that's for borrowers who've had their cars repossessed or sold.
Yeah,
as well.
repossessed, yeah. And I think this is also the other thing was being there's a lot of instances where they were saying, the car value was off. So kind of saying, there was a discrepancy in the values of the cars at the time of the loan being written, and then when it was actually dispersed and being when it was actually closed, being
saw that as well.
differences. So lots of very interesting points in that ASIC report. So at the moment, no real action being taken. They said they've been working with the lenders, and the lenders, to be fair to them, they said had done a lot of changes already. So while this review was ongoing and they were talking to them quite closely, the lenders, where they could make very quick improvements, did. So that's great. But they did say, we'll continue to monitor this. We want to see more action. We want to see more governance. We want to see more oversight. And we'll, keep basically looking at this in future.
Yeah. Yeah, I think it was good that there was a specific regulation on spelling out for the lender specifically, who is this product designed for, and how it should be sold. And
TMDs,
kind of thing as well.
So I think the other thing that we've been hearing, I feel like regulation and legislation have been the two main things we've been talking about this week. But the other things that have been happening were inflation numbers came out. That was pretty interesting because depending on how you read them, they either went up or they went down.
Exactly. It depends on who you ask, I guess.
So yes, overall, this is for the May figures.
Yep.
Coming
May.
out from the Australian Bureau of Statistics. This is Consumer Price Index figures for the month of May, 12 months of May, and the overall CPI figure went down.
It dipped by 0.2%.
But that is not what we really care about. We care about trim mean, and that went up.
Yep, that also went up by 0.2%.
So
3.4 to 3.6.
Yes. Which
in
is
12
not
months.
good for potential cash rate
No.
Because that is not the direction we want to be going in.
No, and the lenders were pointing to that as evidence of, well, we're starting to see that second and third round impacts of the
Cash
fuel,
rate
the cash rate increases, and businesses passing that on, but also the fuel spike that happened a couple of months ago,
Of course.
and businesses grappling and adapting to that and incorporating that and setting that in their prices. And Westpac, funny enough, to justify them keeping in place those 2 more hikes for 26 in August and September. They've gone, well, have a look at hairdressing prices, because that's shot up.
That's it.
So that's
I haven't had my haircut recently.
yeah. Apparently, it has, according to the figures and Westpac, and they're stating that in spaces of the economy we're seeing those price hikes.
That's weird. Why?
Yeah.
That's not a.
Well,
what are they buying?
well, no,
Shampoo?
they're
More
using
expensive?
that as small businesses adjusting
I
their
see,
prices.
their
For
pricing.
small
Yeah,
business,
so hairdressing small businesses as a kind of indicative of all small business, the psyche of a small business owner is what Westpac is saying. That they're starting to raise prices, and you're seeing that in the figures. But like the other banks were pretty unfazed about it.
Yeah.
And they've all stuck to Westpac wasn't the only one. Like ANZ has increased its forecast on inflation by year's end, but only by a margin. Like if we take ourselves back to 3 or 4 months ago, the banks and government treasury were forecasting inflation to tip beyond 5%, and no one's saying that anymore. The banks certainly are.
Touch wood, Charlie.
Touch wood. Luckily, this
You are
table is wood.
tempting fate.
Luckily, this table is wood. But yeah, I think we were just grappling with so much uncertainty a couple of months ago that
Yes.
our minds were
Even
going
more
to the worst.
uncertainty now.
Yeah.
Because, we kind of got a peace deal, but we also kind of didn't. It's hard to understand whether or not we did.
Yes.
Yeah, every day's something new, honestly.
It's like, well, ships are moving, though, through the Strait of Hormuz, which is fantastic.
Yeah.
So hopefully things will feel a bit more normalized again.
Yeah.
But who knows? Who on earth knows?
The important message here is all the banks have maintained their forecasts.
Yes. No one has changed a thing. Although some of them were like, well, this gives us a bit more.
Cause for alarm.
Yes.
Yeah.
Really. Yeah.
None of them. I should rephrase that previous term of unfazed. I don't think they're unfazed. I think majority of the banks were just slightly unbothered by it. But also that rise in trimmed mean was unsettling them, and that they said that, well, look, this might provide the RBA with further thought to hike.
And again, as always,
look
it
at
has
this.
been for the last few months, housing was the thing that was the main driver of increasing inflation.
Electricity bills,
Yeah.
they went up
Yeah.
with all these state government rebates and federal government rebates rolling off.
Yes.
Which, electricity is kind of lumped in with housing, and that went up.
The other thing that was been interesting, I think, that we've been writing about this week has been auction clearance rates really down near record lows.
Yes.
Was that this week? Obviously,
that
Monday.
was this week.
Yeah.
It
Feels
didn't feel like it.
ages ago.
It feels like a
Yeah.
lifetime. It feels like a lifetime
Because
this week,
we're
but-
talking about last weekend's auctions, of course it was this week. But yes, so Catality figures came out saying that clearance rates now hovering at 40-something%.
47.4.
Wow, that
I
is
know.
low,
It's the lowest point since the final week of April 2020.
which was a wonderful time, as we can all remember.
Well, yeah, we couldn't. It was only that figure because no one could attend auctions.
Nobody
'cause we were
was
all
doing
locked up in our
anything.
houses.
Nobody knew
Yeah.
what was happening.
So it's a bit concerning that the number is as low as when we were all in our houses, type of thing, not leaving our houses in a nationwide lockdown.
Yeah. It's interesting. It said like a quarter of all scheduled auctions were cancelled.
Yeah.
Nearly half changed hands in pre-auction negotiations. So
More people going, just trying to avoid the auction day and
Yeah.
costs. But I think this, again, like seeing that's massive, it's a quarter being pulled. Like,
Yep.
people just feeling very nervous at the moment about what's happening in the housing market. I mean, in winter normally is a bit quieter, but
That's
this
what they
is
said too.
40-something% clearance is outrageous.
and I guess that's the other sort of, when we see all these interventions to reduce or sort of moderate house prices, what does that do to sellers? Are they going to sort of accept something that's not quite
They're
what
just
they
not
thought
going
it'd
to
be.
move.
They're just
Unless
not
they,
going to move. And then,
are forcing, like it's a forced hand.
Absolutely need to.
Yeah.
Exactly.
But yeah, it would just be less supply coming on market, which again is not what we want.
There's a house at the bottom of, kind of across from my street that, I kid you not, has been on sale for like 4.5 months.
Wow.
And it's a really good, it's obviously, okay.
It must be a nice house.
Well,
because there's also
it's-
one on my street which hasn't sold for ages, and it's also a very nice house. So it's a bit like, no one's buying it.
It's a
no one
nice
has
house,
that
but
kind
it's
of money.
also a pretty expensive area.
Yeah.
Which I think is indicative of the sign of the times, and people are just sitting on their hands.
And that is what Catality's been saying, is that the top end of the market is where really the numbers have dropped substantially, both in house price growth, actually some house prices going backwards in the really unaffordable suburbs, but also that's where we're seeing a lot of the movement in auction activity too.
And I've written a story today on Friday on a domain report where they're really nutting down on all of their price forecasts and also borrowing capacity, investor shifts, everything you could kind of want and need to know. And over FY27, they expect dwelling values in Sydney to drop overall units and houses, they think, by 5%. But it could be as low as 7% through FY27. And they're also dipping in by a pretty significant chunk in Melbourne and the ACT.
I'm trying to remember what house prices did last year. Can't remember FY26.
Wrong person to ask.
I remember calendar year. I think. Oh, actually, no, I don't. That's a lie. You know what? These forecasts get changed so frequently that keeping the right one in your head is quite hard.
Yeah.
But
when you look at the numerical value of that 5% dip, for some suburbs,
it's massive.
It's as much as $122,000 I saw for a house.
Yeah.
So, depending on when you bought the property and whatnot, you might be, there's a good chance if your loan is fresh, that you're a negative equity. So if you bought the property recently, if you bought a property, I don't know, 20, 25 years ago, you're still laughing. But that's a different story. You're gonna clean up irregardless.
If you bought a property 25 years ago, then everybody is very, very envious.
Yeah, I think that's a fair assumption.
But yes, I mean, I feel like this week there has been so much news. I don't know why I feel like this has been a bigger week for just the sheer volume of news. I think we've written about the same than we usually do, but somehow it feels like there's been more.
No, it generally has though. From my vantage point,
More
the
words.
person who's writing the stories alongside you, yes, it has.
We've
It's
written
been
the
a long
same
week.
amount of news, but they have been longer news stories. Perhaps that's what it is.
Big stories,
Big stories.
Yeah, very consequential. That SMSF
trying to keep them under
resume is
1,000
huge.
words. It's been tough.
Forget about it.
Yeah, I actually have done that. A lot of mine are over 1,000. But I think also this week, aside from the news, we did have some events as well. I actually went to 2 awards back to back this week, which was really fun for me. I am definitely going to catch up on some sleep this weekend though. We had the Broker Innovation Summit and Broker Innovation Awards in Sydney. That was held by our sister title, Broker Daily. And again, it was fantastic to see so many brokers there who've been doing some incredible things with technology and AI and also just innovating more broadly. We had lenders there as well, looking at how they've been innovating and talking to them. We heard from 8 AI specialists and futurist technologists talking about what they're seeing out there, which was really like your brain just exploding. We heard from brokers themselves. It was a fantastic day, the Broker Innovation Summit. And if you like the sound of it and want to go to it, there is one in Melbourne next week, next Friday, the 3rd of July. So you can buy tickets to that still at brokerinnovationsummit.com.au. But the awards was for both. It was a national award, so we only have one of those in Sydney. And that was a lot of fun. It was a Wednesday at Illumina Sydney, which is in the metro station of Martin Place, which I'd never been in. I'd been in the metro station, never been to this venue before. It was a lovely venue. I had a fantastic waiter on my table who made sure that I was drinking all the champagne all night. So thank you very much.
Oh, that's always
and then on
nice.
Thursday, we had the MFAA State-Based Awards, which the advisor was partnering. We were really proud to once again sponsor the Specialty Lender Award, and I got to present that at the awards on Thursday night. And again, fantastic to see so many brokers and members of broking industry at the event. Thank you to everyone who came over and said hello and who said they loved the podcast. Hello back. We love you back. And yeah, lots of great things going on. But generally, I think the mood in broking is one of exhaustion.
Yeah. Well, mortgage demand is down as well.
Mortgage demand is down. I think everyone's feeling a bit downbeat. Mortgage demand is
Yeah.
down. the kind of,
The inquiries
investors
down as
are
well. But
cooling off, first
hit
buyers.
hit an 81% market share. That's great.
That's true. But that was last week's news.
But still, we're cutting through. There's a light at the end of the tunnel.
yeah.
Almost the end of the financial year, so
That's it.
can use
Everyone
that.
is starting to feel like, you know what, maybe we should just all stop work for a bit and watch the FIFA.
yeah.
FIFA World Cup at the moment. So Friday afternoon, this evening when this comes out, we will know the score. We don't yet know what is happening in the Australia game. But good luck.
Yeah, hopefully we
Good luck, Australia.
we smash Paraguay.
Yes, I actually
I'm not
was
biased at all.
glued to my phone on Wednesday morning because when we had the summit going on, it was the England game. And I was a bit like,
You guys drew to Ghana.
We did indeed. Yeah,
That
I
was
was
a-
like, I will be with you at 8 o'clock. And they were like, how about 7:45? And I was like, I will be there at 7:45 and I will ignore you until 8 o'clock.
Yeah,
So
that's
just
it.
sat in a corner watching the end of the match. But yeah, it was a very boring game actually.
Yeah.
But yes, for everyone else, if you've got any news for us, do reach out and let us know. You can reach us at editor@theadvisor.com.au. And of course, Ben, Charlie and I are on socials. Find us. Let us know what you're up to.
Yeah,
if
hit
you
us
think there's
up.
something we should be writing about. And of course, if you've got any other things that you want to know or do, you can pop a comment on the website, you can email us, you can reach out on social media, and leave a review on this page too. We'd love to know what you think about the podcast. If this is the sort of content that you enjoy, please do leave a review for us. Let us know what you think. Ideally, a good one.
Yes. Yes. That would be good.
A
Or
complimentary one.
directed at someone else that we spoke about. You
Yes,
know.
yeah. But we'd love to
So long as
see.
it's PG.
We'd love to be engaged with you, so do make sure you reach out and chat to us. We'd love to hear more from you. Otherwise, we'll catch you next time for another episode on the Advisor Podcast.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.